Hello and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I am back to deliver your local real estate news for the week. I'll go ahead and jump right on into these slides. So today is January 20th, 2023, and the Seahawks did not win last Saturday, so that is the end of their season. But we look forward to next season. They put up a good fight in the first half. At the end of the first half, the Seahawks were ahead. So that was a really good game. I was really excited to get to watch that one. And I am looking forward to next season. And what happened this week? So this week, I had a client that was interested in a property that I sent to him. Very much a rehab fixer-upper property. It's an estate sale. So unfortunately, somebody passed away and now this is being sold by their trust and it needs some work. But that is kind of what we were expecting, what we were looking for. If you buy a house that needs more work, there's more equity to be gained, because if you improve the quality of the house, you'll often make out ahead on the costs that are put into the house and the equity that you gain by fixing the house up. My client, we're touching base in a little bit, but I'm super excited. I think this is a really good buy. It's a great price point, and I think it's a pretty good fit for my client. So I'm really hoping that this turns into something, and I'm really excited to find the fixer-upper that we've been looking for a while, and I will hopefully share some good news related to that with you next week. Go ahead and jump back on into these slides for now. And so this came out today in the Seattle Times. 2022 was the slowest year for U.S. home sales in nearly a decade. Year over year, we had about 18% fewer sales last year than we did the year before. And that is the weakest home sales report since 2014 and the biggest annual decline since 2008. So this is some scary numbers, but there's more to be looked at here. These are national numbers. It's a national article, but nationally, home prices jumped 10.2% year over year. So where they were last in December of 2021 versus where they were in December of 2022, jumped 10%. And it's up 42% from 2019. So think of any investment. If you put an investment in 2019 and then 3 years later, it's worth 42 more. Yeah, that's a good deal. That is a higher than average return on any investment. But this is showing year over year numbers, which I'll dig into a little more in a second. Mortgage rates have more than doubled since 2022, hitting a 2-decade high of 7.08 in the fall. So home sales did slow down quite a bit over last year as those rates were ticking up. But as rates rise, they can add hundreds of dollars to the mortgage. That's why. So these loans are costing a lot more for people. So the cost of a house is greatly increased if they're using a mortgage, if mortgage rates are high. In 2022, first-time buyers were about 26% of all homes nationally. I got to see a number of first-time home buyers buy their first home in 2022. So I know that this is a national number, but I think locally ours might be just a tad higher. Perhaps not, but okay. But these next 2 points were a couple paragraphs apart in the article. Mortgage rates are likely to remain a significant hurdle, with the Federal Reserve consistently signaling its intent to keep raising short-term rates. While inflation has begun to slow, some Fed officials maintain that the central bank needs to keep hiking rates to make sure the job is done. The Fed has signaled that they're going to keep raising the Fed interest rate. Based on that, we would expect mortgage rates to go up to the end consumer in the short term. This is a quote from Lawrence Yoon from National Association of Realtors. Mortgage rates have fallen in recent past weeks, so I'm very hopeful that the worst in home sales is probably coming to an end. Maybe this latest monthly figure will be the cyclical low point. This suggests that we can expect mortgage rates to generally trend downward starting from here on out. So these are the same article, a couple paragraphs apart, and give both have truth in them. I do think we will see rates falling from here on out not every week, but on a general rule, we'll see rates ticking slowly down, perhaps remaining a hurdle for some, but opening up opportunities for more and more individuals as we get further into the year. December sales sank 34% from a year earlier. So the number of sales has greatly decreased from 2021 to 2022. We are seeing way fewer sales than we have in quite a while. So we're looking at November 2010 to the last time sales were this slow. The national median home sales price rose 2.3% in December from a year earlier. And even if prices do stabilize, we're going to have a shortage of inventory on the market. Like, I don't see the prices really stabilizing for very long. They may, as people adjust to the new norm with interest rates, but once they realize that 5, maybe we get down into the 4s, who knows? But that is our new norm. We're not going back to 2 and 3% interest rates. That's not happening. So if you're waiting for that to buy a house, you'll wait a long time. And I would hate to see whatever disaster caused that to happen again. And remember, that only happened because we had a global disaster in the pandemic. So we don't want to see that again. We want to see 4 or 5% interest rates. So if prices do stabilize, we can expect inventory to push those prices back up again. Home buyers right now have more to choose from than this time last year, but we have been slowly shrinking in inventory for the past few months, as pictured here. So this is from King County. This goes back 5 years. I made this clickable so that you can see live numbers. So right now for King County, December 2022, our average sales price was $720. We peaked in May at $877,750. So $878 is where we peaked basically. January 2022, a year ago, we were at $720 and we're back at $720 again. This whole year in King County, we're pretty much even at this point. But if we look back to like 2019, January 2019, the average home sale price was $569. And now it's $720. So long term, if you're a long-term homeowner, you've done well. So I shared this quote, the next couple quotes last week, but I thought they were really good to bring up again. The upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. And that's from Lawrence Yoon, Chief Economist at National Association of Realtors. And this is David Stevens, former Assistant Secretary of Housing. So be advised, this may be the one and only window for the next few years to get into a buyer's market. And remember, as the Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. Long-term homeowners should view this market right now as a unique buying opportunity. So if we look back at this chart, if we're right here right now, and we see this January to December, January to December, January to December pattern, we can expect that this next cycle will go higher, land higher at the end of the year or beginning of next year. It's just the pattern that real estate takes overall. Really, I expect in our area that home values will remain strong. And that brings us to our Market Stat Minute. We had 442 new listings in King County in the last 7 days, 574 pending, and 251 sold. So our pending is outweighing our new listings. So we are still seeing a reduction of inventory on the market. Generally, we would expect in the next month, 2 or 3, to see inventory on the market increase. Hopefully we see that going forward because there is definitely a shortage of inventory on the market at the moment. And if we bring it to our local area breakouts, you can see that everywhere pendings outweigh the new listings. Federal Way, I pointed them out last week as having exceedingly few new listings. I think there were four or five new listings in Federal Way last week. And they're making up for that this week. There was apparently people in Federal Way were just delayed a week on getting their homes on the market. So they have a lot more new listings compared to the pendings versus the other areas that we're talking about here. But they were the stark opposite last week. So they're just catching up. And last week, our weekly average mortgage rate was 6.33 and daily was 6.09. This week, we are at 6.15, dropping to 6.15 for our weekly average mortgage rate. But what's happening with our daily? 6.15. And that is actually up higher than yesterday and the day before. We were lower on Thursday, Friday. That was the lowest point. Mortgage rates are actually higher this week, slightly. I do expect the overall trend to go down, but that's not going to happen every week. So despite the fact that all these articles are saying rates are down, that is a Freddie Mac weekly average survey. And that is what banks are doing on Monday, Tuesday, Wednesday, generally more Monday, Tuesday. That's when they respond to the survey. So it comes out on Thursday. So a lot of our big changes recently have been on a Thursday or Friday. So the weekly average mortgage rate hasn't captured that. Right now, the weekly average mortgage rate is capturing what happened last week. And then the next one will capture what happened this week. Rates aren't necessarily lower than they were last week, even though yesterday's rates were lower than the first 3 days of last week. I just thought I'd throw this in there. This is just a couple points about what people are doing to mitigate the higher interest rates. Some quotes here. The risks of ARMs, which is adjustable rate mortgages, they got kind of a bad rap back in the day. The risk of ARMs were substantially mitigated by the regulatory reforms put in place after the 2008 bust. Today's ARMs are not the risky products of 2008 or even the pre-bubble version. ARMs are no longer something to fear. In fact, they could help borrowers save money and could reduce barriers to home ownership. And then here's another one. Temporary rate buy downs are a hot trend for mortgages as borrowers face higher costs for home loans. Some home buyers are exploring alternatives to traditional mortgages in a period of rising interest rates that is expected to come down into 2023. Buy downs are a less costly alternative to traditional fixed rate mortgages. So a rate buy down, you can pay extra money. I'm not going to go into it right now, but it makes your overall payment lower for the first year or two, making it more affordable to get into a home. And if you are curious about various home buying options and ways to structure it on the financing end of it, you're in luck. I have 2 classes coming up, 3, but the third one, I'm working out the details. If you scan the QR codes, it'll take you to the registration page, or you can check the description or links afterwards. I have a class. Oh no, I put the same picture. So the first one is January 25th, I think, and that is buy now, refinance later. And the second one is February 7th, 6 to 7:30 p.m. We probably won't go that late, but that's just to allow for questions. Both webinars. Second one is for nurses and teachers. So that one is a little more restrictive on who can take advantage of that program. The first one is buy now, refinance later, which is a great program, especially for this market right now, because we do expect rates to go down heading forward. And when that happens, buyer demand is going to shoot up, which means prices are going to shoot up, which means you're going to have a lot of competition and have to pay a lot more for a house. So get in now with a slightly higher interest rate and refinance once rates go down. And just a reminder, in case you missed it, we do have the 2022 recap, 2023 predictions episode up and available on YouTube, my website, all of the places. So make sure to check that out to see what is coming ahead. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to hear from you with your questions, curiosity about certain market areas, anything like that. Any way I can help, I'm happy to do so. Thank you so much for joining me. I will be back here next Friday with your local real estate news, and have a fantastic week. Don't forget to register for those classes. and check the description for the links. All right. See you next week. Have a good one.